Turning out to be a bit of a rough ride for the markets off late. The sell-off, which continued for 4 consecutive days, ran into a fifth one in today's trading session, and it couldn't have been any different given the kind of global landscape that we set a foot in. Look at the kind of cues that you were handed over from the US markets overnight. A big sell-off, irrespective of very positive commentary coming in from the US Fed. Jerome Powell saying in as many words that the lower interest rate regime is going to only continue going forward as well. That also didn't quite resurrect the market sentiment. That sell-off only gathered pace when Asia opened up trade. In fact, markets like Hong Kong was staring downwards by about almost 700 odd points. The SGX Nifty was indicating a gap down start for us, and a gap down indeed it was. Net result, we have just about managed to defend that 13,800 mark in trade and just about scratched that surface. At one point in time, we were a lot lower. We were staring lower in excess of about 200 points as well in today's trading session. That said, the texture of the market as well has gotten fairly challenged because the last pin standing, or the last island of safety, which typically is always IT, the defensives in the market, they as well got collapsed in today's trading session. So for instance, the IT pack, TechM, TCS, HCL Technologies, all of these names as well stood out to be losers in today's trading session. At the bottom of the heap continues to be the private banking names, so was no different today as well. An HDFC Bank got clobbered, your Kotak Bank, ICICI Bank, they were all down. BOB, even though it came out with a good set of numbers, saw an 11% sharp sell-off coming in. The broader market as well got acutely challenged, and I'll come to that in just a bit. But first, just the texture of what the heavyweights were up to. Maruti was down about almost 4%. Good numbers from Unilever as well saw a sell-off in the stock, about a 3% downtick coming in there as well. Just a handful of movers. Axis Bank, after the brokerage upgrades, posted its numbers yesterday. That managed to close well in the green. And an SBI, which held up by about 2.5%, and a BPCL, Shree Cement, etc. But there were negligible moves there as compared to what Axis and SBI did in trade. Even in the broader markets, like I said, even though they recovered a little bit from the lows of the day, but names like BOB, United Spirits, which collapsed by about 9%, M&M Finance, or for that matter, even Godrej Properties, they saw some heavy sell-off coming in today's trading session. Got done though with the expiry, and the Jan series definitely has managed to snap the winning streak that we saw all of 2020. That said, there clearly seems to be some risk aversion which is playing off not just for our markets but globally as well, as you saw being a case in point as to how the markets panned out today or overnight for US equity markets. Even Europe had a very steep fall when they opened up for trade. And not just that, for our markets domestically, there is also some amount of nervousness, and people want to go in light into a big event like the budget, which is only now one trading day away, with the budget being presented on Monday itself. So that is bringing about some amount of nervousness in the market.